Borrower defaults causing business closures. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I've got my stein of coffee. I hope you have yours too. Let's have a look at this article from the ABC News discussing warnings from the RBA about substantial business failures and borrower defaults as stimulus is wound back. So, well, one of my biggest concerns with all of the government intervention, and the one that scares me the most, probably because I've got experience with it, is trading while insolvent. Now, as a business person, when you're, doing work for someone, you give them credit, essentially. You'll do probably a month's worth of work, or maybe more, or maybe less. Then you send them out an invoice and give them terms. Usually, 30 days? Construction, it can get up to 90 days. And if they don't pay you, there are a few methods you can take. You can try and chase them up. Ring them up, constantly send reminder letters, send demand letters, those type of things. You can get lawyers to write scary letters. You can threaten to shut them down, close them down with ASIC as they are trading insolvent. Take legal action to try and close them down. That usually is a wake-up call. Now that's been removed. That requirement now has been extended. They now have 6 months to respond to you. So if you're in business trading with someone and you need that money to come in, but they can just take 6 months to not pay you, that could shut down that business. Happens a lot in construction, where they use you to finance construction of a project. The old paid when paid line, that's actually illegal. It's actually illegal. That's what really scares me. Because I've been in this situation where businesses I've worked for haven't paid. You chase them up, you take them to court, you win cases, you go with the debit collectors, everything, and still can't get the money. And that's going to be quite stressful if you're depending on that cash to come in. It's one of the reasons why I've scaled back my business to reduce my operating costs, so I don't have that inherent risk anymore. Because in construction, when times get tough, people drag out payment. And we've seen it happen many times. It's quite frustrating. Let us know in the comments if that's hit you. A lot of workers may not appreciate that, or may not have encountered it, or not as often as small business people. So here's the concern. If the RBA is worried that we're going to see businesses falling over and borrowers defaulting on their business loans as the stimulus is wound back, it's going to be a trickle through of the rest of the economy here. So the Reserve Bank has warned that Australian home prices are likely to fall further, borrower defaults will increase, and business failures will rise substantially as the pandemic stimulus comes to an end. Well, this is the thing. We've been warned about that over and over again, about pandemic stimulus coming to an end. They just kick the can down the road even further. The warning comes in the central bank's twice-yearly financial stability review, which looks at the health of banks and the financial system. The coronavirus pandemic has shut down parts of the Australian economy, plunging the country into the first recession in nearly 3 decades. Mortgage loan repayment holidays granted by banks have started to expire, and income support measures like the JobKeeper wage subsidy have been wound back. But now we also have we've got credits coming as well. $100 for every worker you hire, $200 for every one you hire for, a year? The RBA said government assistance, loan repayment holidays, and temporary insolvency relief for companies have seen increased cash buffers and lower rates of business failures in 2020. Business failures have flow-on effects to their creditors, both financial institutions and other businesses and their employees. It said commercial property investors will see losses if prices for office and retail properties fell sharply. The outlook for commercial property means banks' impairment rates are likely to increase from their current low levels, the report said. However, the RBA said the banks were better placed than in the downturn of the 90s and the GFC in 2007 and 8 to handle a rise in borrowers not being able to make repayments. It said the Australian financial system was in a strong position even though the risks were elevated. The RBA said that with unemployment having increased and many people working reduced hours, the number of households experiencing financial stress had risen and will increase further. While noting that demand for housing has held up, it said that national house prices were 1.5% below their April peak. And the central bank warned that home prices could keep falling, which would put pressure on banks if more borrowers are forced to sell their properties. And this is where I think the banks will start to push people to interest only and everything they can to just drag out people who can't make it, to keep them going. While credit is available at very low interest rates, reduced housing demand from very low immigration and the rise in unemployment contribute to the risk of further falls in house prices, the RBA said. The RBA estimated that the share of borrowers in arrears could reach around 2% if the unemployment rate rises to 10%, doubling the current rate of housing arrears. Well, is that counting? Well, obviously they're not including all the people on mortgage holidays. Traditionally, they would be in arrears. Meanwhile, record low interest rates and an easing of pandemic restrictions saw demand for home loans rise by 12.6% in August, according to the Bureau of Statistics. They are up 19.3% over the year. So the ASX sees choppy trade over US stimulus mixed messages. The Australian shares opened higher, but ran out of steam amid mixed messages from the Trump administration, Republicans and Democrats over the extra aid to help North American economy through the crisis. The US President Donald Trump said overnight that stalled talks had restarted on targeted economic stimulus. By the close, the benchmark ANX 200 index was flat at 61.02. And let's go over here to Trading Economics to see where it is at the time of recording. And we are at, 61.02. The All Ordinaries was up at 6,313. The market rose for 4 days in a row this week, helped by a business-friendly federal budget. The majority of sectors in the ASX 200 ended in the red, with losses led by education and healthcare firms, as CLS traded ex-dividend. Harvey Norman fell 3.5%, as it also went ex-dividend. Buy now, pay later firm SIP lost 4.7% after yesterday's large rise, leading declines on the ASX 200. The big banks were mixed, with Westpac and ANZ higher, but CBA and NAB lower. Gold miner Newcrest Mining announced plans to spend $236 million to expand its Cadia gold mine in New South Wales, and on a project to increase gold production at its Lihir mine in Papua New Guinea. The miner said it expected more than 1,000 new jobs would be created by the projects at their peak, including 860 in Australian, and Newcrest shares rose 3.2%. Big miners BHP and Rio Tinto both fell. Construction firm CIMIC saw revenue drop because of the recession, but it said revenue picked up in the third quarter after the COVID-19 slowdown hurt projects in Australia and overseas. It made a net profit of $474 million for the first 9 months of 2020, down 17.4% from $573 million. The firm announced that negotiations to sell part of its thesis contracting arm were well progressed. Its shares jumped 9.2% to $21.70. At 5:08 p.m. Australian Eastern Time, the dollar was up to 0.1 to 71.76 after a rise in commodity prices, including iron ore, which rose 1% to US $118.50 a ton. Brent crude oil prices rose to 43.41. Because of the hurricane-related shutdowns in the Gulf of Mexico and a strike by oil and gas workers in Norway. However, they slipped in Asian trade. The US election uncertainty and optimism about pandemic relief also boosted gold. The precious metal rose 0.7% to US $1,905, announced today. So renewed optimism over the relief. The US president told Fox Business that talks were starting to work out, with some discussions over aid for airlines and $1,200 stimulus checks for Americans going on. Mr. Trump's comments came just 2 days after he halted negotiations on new spending until after the November 3 presidential election. He later called for standalone stimulus aid for airlines, small businesses, and direct payments for Americans to be approved by Congress. House Speaker Nancy Pelosi told Bloomberg TV that emergency assistance for airlines was a matter of national security. It could only pass through Congress with guarantees that discussions would continue on a more comprehensive stimulus package worth more than US $2 trillion. They don't have to happen at the same moment, but they have to happen with assurance that we will go beyond the assistance of the airlines, she said. Ms. Pelosi said she was hopeful that she and U.S. Treasury Secretary Stephen Mnuchin could reach agreement on the amount of new aid to crush the coronavirus cases. How can aid crush the... I mean, it's just... They're just now... The same thing's happening as over here in Australia. They're just pumping out money left, right, and centre. No one can really have a claim to be against it now. The Republicans can't make an argument anymore. They can't make an argument. Not that they ever could they? Mr. Trump is behind Democratic presidential candidate Joe Biden in the polls. Do you trust the polls, guys? We all saw that the last debate and then the vice presidential debate. Chief investment strategist at Investment Council in New York, Tom Grisky, said the market was anticipating a fresh stimulus package. Overall, the market seems very accepting of a potential Biden win and Democratic gains in the Senate, he said. The market usually tends to prefer gridlock when changes happen slowly, but in the short term, you'd get a stimulus bill if there's a clean sweep by either party. So US jobless claims remain stubbornly high. New claims for unemployment benefit edged lower but remain high and were well above the levels seen during the Great Recession of 2008. The US Labor Department said initial claims for state unemployment benefits were a seasonally adjusted 840,000 last week compared to an upwardly revised 849,000 in the week before. Last week's claims were the lowest since March, but they have stalled at historically high levels, which should suggest there is little improvement in the employment market after millions of people were thrown out of work because of the coronavirus pandemic. New claims reached a record 6.8 million in March. The number of people continuing to draw benefits fell to 10.9 million in late September. ANZ economist Adelaide Timbrell said the fall in claims was because the 26 limit on benefits is expiring for many people. So, coronavirus relief hope boosts the US stock. US stocks fluctuated but ended higher for a second day on hopes about new stimulus. The Dow Jones rose 0.4 to 28,426, S&P 500 put on 0.8 to 3,447, and the Nasdaq Composite increased 11,421 to 0.5. Energy stocks led the market after. Airlines extended their gains, and computer giant IBM jumped 6% on plans to split into two public companies by spinning off its infrastructure services unit. Warner Media is planning a corporate overhaul which could see thousands of people laid off as the coronavirus pandemic hurts the film and television industry. This comes after the firm axed more than 500 jobs at Warner Brothers in August. Eaton Vance surged 48% after Morgan Stanley agreed to buy the asset manager for about $7 billion in a cash and stock deal. European stocks joined the rally and reached nearly 3-week highs in hopes of US stimulus talks. FTSE 100 added 0.5, the DAX rose 0.9, the CAC rose 0.6. So we can see here in the US more hope for stimulus. The market is just primed for stimulus. Here in Australia, concerns that if they pull away stimulus, businesses are going to go under, people are going to default. And the market is here primed for stimulus. It's getting trained for it. It's getting trained for it. What do you think, everyone? Where do you think it will head? Do you think there will be more, what is this next election? I just got an email. Facebook, where the opposition leader here in Queensland, the LNP, is going to give every Queenslander $300 cash back for their registration after they win. There you go. I mean, car rego has gone up an insane amount, like nearly, 19% with Labor in charge? My last rego bill I paid was $1,000. Fantastic. So, I think that will make a big difference to a lot of people. And let's hope it goes on. They keep the bill down. So we'll have to see, guys. We'll have to see. Now it's just a game of who can promise the most support, the most stimulus, and the most handouts. And all of us in business just going along for the ride, it feels. As always, let me know your thoughts and opinions. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, guys. Have a great day. I'll see you next time.